Welcome to TICE. Today I have with me Mr. Manish Lunia. He is the President of DLAI and co-founder of Flexi Loans. Welcome Manish.
Thank you very much, TICE, for having me here.
So Manish, to begin with the conversation, we are sitting at the 6th conclave of DLAI. How do you think such gatherings and such platforms really add value to the industry?
I think DLAI as an association was formed by a group of fintech founders who believed that there is a need for a platform wherein people can come together, discuss the common areas of opportunity, common areas of issues that the industry is facing, and how to further the entire group together in the bolstering fintech ecosystem which was there. Over the last 7 years, DLAI has placed itself at the forefront of the industry issues. It has kind of propagated and advocated the real issues that industry is facing. It has cross-threaded ideas and exchange of both people and good practices that's there. Today, DLAI is actually acting as a self-regulatory association where its members follow a common code of conduct which ensures that the customers get the most transparent conduct when following the lending practices.
Also, financial lending is an old age concept in India, and with the emergence of technology, it has come a long way. And now, how do you feel that, over the years it has emerged? So how do you see that change in the customer patterns and in the kind of customers that apply digitally?
I think to put it very simply or in a different manner, there used to be ticketing earlier wherein we would go and visit and stand for hours of queue, and there's now nobody who visits the railway stations for ticketing, right? So what the online IRCTC did for ticketing, what Uber did for waiting in long cabs and this thing, is what fintech has done to application and customers. There's a latent demand, there's a huge demand which did not kind of rectify. And what Ola, Swiggy and Zomato have done to food, there's a lot of demand which is potentially available and latent. And I think the digital ecosystem has now shown the world or shown the country, the people that by very simple documentation and credit behavior that they can display, they can get good affordable lending to themselves without really waiting for the long documentation in queues.
Do you think that there is also a change in end usage specification specifically for credit-based system?
I think the benefit of actually doing digital lending is the fact that there is a lot of assessment that goes around what is the customer doing, what are the demographics. There's a lot of digital know-how about these customers, right? And that is the basis now on which the transactions or lending is being done. For example, in consumer-based lending or embedded finance, the customer is now transacting or buying a good and service and has an option to actually take the credit. So that did not exist earlier. So you know where the usage is going. Likewise, in MSME loans, with the advent of supply chain finance, you know in platforms like Threads and many others that the money goes towards buying of inventory or buying of the receivables, etc. The last thing, there's a lot of data trails that are happening in the bureau and the banking ecosystem, with India now having an 80% saturation of banking, that you really know what's the customer doing with the funds around. So every time you assess a customer afresh with account aggregators, you can actually assess a customer on a daily basis. There's a lot of digital trails that didn't exist in the erstwhile avatar, but exist now. Every small rupee that you paid to a small tea shop otherwise via the UPI is getting recorded. More the digital trails, more the data about frequency and how you use the credit or your banking ecosystem, I think better your assessment and credit. And that's where digital lending is facilitating all of this.
Also, female and finance have kept separated for quite a long time, but things are changing now. So what, according to you, is the percentage of loans that mainly goes to, I'm talking about the new loans that mainly goes to the female-led enterprises?
I think let me take two separate data points. One, the fact that unfortunately India struggles to have a lot of women entrepreneurs in the formal economy and formal ecosystem. However, if you look at microfinance industry, I think a large part of microfinance industry has grown in India only on the base of able women who actually borrow and run enterprises and micro enterprises. taking the same to digital setup now. The digital setups actually take away the if there was any divide, if there was any subjectivity about not lending to women or otherwise, takes that away, because data speaks for itself. The kind of cash flow information, the kind of payment behavior is all apparent. So any subjectivity that happened between genders is avoided. Secondly, I think women don't trust financial decisions easily, right? They are very choosy. They want to have the best offer. With the kind of advent of transformation and information that is available with digital lenders, with the kind of simplicity in which information is available to them, and the fact that digital lenders have been available for a while, I think women are more trusting these digital lenders versus the traditional NBFC or lending otherwise. The taboo of taking lending has also gone away, because you are now buying credit for actually meeting your needs, and women can do it. So I think there's a lot of stigma that's broken with digital lending.
You talked about the difference of like patterns of female and male. So do you think that when as a lender, when a company give out the money, so do they also have some different parameters while evaluating a men-led enterprise and a women-led enterprise?
There isn't as I mentioned, at the time of lending, there is no subjectivity that is there. In practicality, however, what one realizes is during the stage of credit that there are, in India, unfortunately, again, a lot of women are only used as KYC front for most enterprises for various reasons like tax and otherwise. And they will not know the operating stuff about with their businesses. And the men in the family would be running the shop. At this point in time, only women-led enterprises, if the men have some credit derogatory marks or otherwise or history, they get rejected just because they are used as front for loan applications. But other than that, there are many schemes that many partners of ours and otherwise in the digital ecosystem work, where women actually get subsidized rate of loan, because we know that women, once they take loans, I think the credit behavior of women is actually much better than the men who borrow. And women also act as that symbol of in the family of being conservative. So men could be aggressive in actually taking loans and over-lever themselves, but women kind of balance that. So there is no underwriting difference specifically, but because the models will throw that women borrowers pay better than men, I think there's a bias that gets in favor of women.
Okay. Also, we also hear a lot about women-centric products tailored specifically for females. So how do you think that financial lending can be simplified for females?
One, we believe that there is no need for a gender bias here. We have to be inclusive. I think the fact that most platforms are gender inclusive is a great testimony to how digital lending is doing, right? You don't need to stand in the long queues. Women would not want to stand in long queues, and there could be 10 men and 2 women who are standing in the queue, right? So you can apply to a digital loan at the click of a button, right? At the time and place of your choice. So that's giving a lot of comfort to women more specifically. At the same time, there are various platforms that are actually helping women save, learn, know more, educate them more about both the investing process and the lending process, right? And the borrowing process. Platforms that specifically help women entrepreneurs to kind of come and share their thoughts have come in the digital space. So I know of a few partners of ours who actually are only doing webinars and seminars to ensure the dissemination of credit happens to women. As I mentioned, a lot of our lending partners, a lot of our actually mandate upon us to actually have women participation in our borrowing base. So there's a lot that's happening in the country, a lot of subsidies that happen for women. The only reason why that's happening is to actually promote more inclusiveness.
With a lot of advantages of financial lending and digitalization, we also have a few cons of the same. How do you think that education and awareness plays a role here, and what your company is doing towards it?
I think this is the time, and as I was mentioning during the conclave as well, that there's a need for heightened investment in compliance. there is a lot of technology that's helping and coming to aid, that is promoting inclusiveness, that is promoting customer experience. But at the same time, it can actually throw perils of customers not being aware. It could throw perils of fraud, and in the age of AI, deepfakes, and so on. So the kind of frauds will change, the kind of customer discomfort will change. And so what my company and what DLAI has done is recently being part of Fintech Suraksha initiative for the consumers. We've all pledged to actually spread information that supports the customer to know how to find out what's the right sources of borrowing, how to ensure or what are their rights, how to reach out to their respective lenders and including us, where to reach out for grievance, being right upfront to the customers. Hey, if you have a grievance, this is where we kind of can be reached out, and the timing. So spreading awareness about the fact that you're not alone or you would not be discarded once you've borrowed is very important. The fact that we are always available, transparent in the space is very important, and that's what I as my company and DLAI have all pledged to.
Like being a renowned and being a reliable name, I would say, in the fintech space, what do you think, according to you, are the some key identifiers to identify fraudulent lending app?
I think a lot will come in the space, but what's currently, I think, as a part of Fintech Suraksha initiative, some of the things that we mentioned to customers is to see whether the app is actually in the whitelisted list of stuff in DLAI, and the government and the finance ministry has been releasing a list of whitelisted app. Please check that. Please check the manager of the app, the company that runs the app, and are they a part of the designated lenders that the RBI has as a list or not. But please do not succumb to any links which are unknown, which is not verified, which look like something too good to be true, something that will kind of give loans real time but without any guarantee, and you don't have to pay. That never exists. So something that looks fishy, please be extra alert. Please ensure that you ask your rights and duties. Look at the governance mechanism, which is again the grievance redressal, which is there on the website. I think some of these are very basic checks. Do some of your digital checks about the entity where you are borrowing from. Do not give documentation or information to anybody. Please identify the source of the person asking for the information.
Thank you, Manish. Thank you for your insightful thought.